Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is November 9 and we're starting with a draw of pivot points for majors EURUSD and then GBPUSD. Evangelos Poulakis presents. Yesterday brought no changes on EURUSD. The market remained within the range of the previous day, failing to achieve any significant changes on new results in its movement. Therefore, the main conclusions and expectations voiced earlier remain relevant today. For bullish traders, the weekly resistances at 1.0733 and 1.0766 are crucial in the near term. For bears, the current tasks involve testing the supports of the golden cross of the daily Ichimoku cloud 1.0638, 1.0620 and 1.0588. Reinforced by the area of 1.0614. On the lower timeframes, the bulls continued to maintain advantage, trading above key levels that are currently joined forces in a relatively narrow range of 1.0695, 1.0687. Central pivot point of the day, and weekly long-term trend. To strengthening bullish sentiments within the day, there are resistances of the classic pivot points which can now be noted at 1.0731, 1.0752 and 1.0788, coinciding with the weekly resistances. Therefore, breaking through this area may open up new prospects not only on lower timeframes, but also on higher ones. Consolidation below key levels will pave the way for support of classic pivot points 1.0674, 1.0638 and 1.0616. The downward trend on GBPUSD was maintained yesterday as bears continued to test the accumulated support. The support zone on this part of the chart combines daily 1.2277, 2258, 2248 and 2205, and weekly 1.2268 and 2292 levels. A breakdown and a secure consolidation below will allow bears to set a new and more global targets, such as restoring the weekly downward trend 1.2036. A confirmed rebound and active recovery of positions will redirect attention to the fortified resistance zone at 1.2458, 1.2472 and 1.2506, monthly levels plus weekly Fibonacci in June. The key levels today have practically merged in the region of 1.2273, 1.2283. Central pivot point of the day, and weekly long-term trend. And the market has been in their zone of attraction and influence for quite a while, indicating uncertainty. In the case of directional movement development, the path for bulls within the day will lie through the resistances of classic pivot points 1.2307, 1.2333, and 1.2367. While potential strengthening of bearish sentiments today may rely on the supports of the classic pivot points 1.2247, 1.2213, and 1.2187. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsoupas. Early in the European session, gold is trading around 1954 and bouncing around the 200 EMA, showing some recovery after several consecutive sessions of decline. Gold, since reaching the 2005 level, formed a bearish channel, which fell without a technical correction. In the next few hours, the unemployment claims report will be released. Later in the day, Jerome Powell's comments are expected. But it's unclear at this stage whether he will provide any news. If he hints that the Fed will end its monetary policy, gold could gain upward momentum and reach 1971, and even the psychological level of 2000 USD. According to the Eagle indicator, gold is in an extremely oversold zone, which could lead to a technical rebound in the next few hours. The key will be to wait for consolidation above the 200 EMA. Then it will be seen as a buying opportunity with targets at 1958 and 1971. 200 EMA 1944 could provide strong support for gold if it consolidates above 1945, and we could expect it to reach 7-8 Muri level at 1968, and even the 21 SMA 1971. On the other hand, a drop below 200 EMA could reach the 6-8 Muri level at 1937. According to this area, if gold rebounds due to oversold conditions, it will be considered a technical correction zone and a buying opportunity again. We've got a mid-term trading plan for natural gas commodity asset, area of Makmur describes. From the daily chart of natural gas commodity asset, there seems the deviation between its price movement with RSI indicator as well as the bearish Y-wave projection pattern, so that in a few days ahead, natural gas has the potential to weaken and go down to the level 2712. But if on the way to those levels suddenly there's an upward correction until it breaks above the level 3407, then the downward scenario that has been described before will become invalid and will cancel itself. And finally, here's Laurie Bailey with USDJPY currency pair forecast. Let's have a look. Yesterday, the USDJPY pair moved above the embedded price channel line, significantly strengthening the US dollar's position against the Japanese yen. The Marlin oscillator's signal line has stabilized within the uptrend area. The pair can reach the first target at 151.95. USDJPY could even try to surpass this level, with plans to reach the next price channel line around 153.15. In order to continue the downward movement, it needs to settle below 150.00 and then overcome the support of the MACD line around 149.36. We're still waiting for the pair to reverse into a medium-term downtrend, but this may not happen this week. On the 4-hour chart, the price is rising above the indicator lines, and the Marlin oscillator is in the bullish territory, indicating a short-term uptrend. To disrupt this trend, the price would need to settle below 150.79 level, which represents the support level of the embedded price channel line on the daily chart, as well as the high from October 26. That's all for today. See you online soon and good luck!